our pleasure. Japan's obviously been the topic du jour, I suppose, for the last year and a half, but obviously a little bit more so over the course of the last week because of all of this intervention chatter. In your mind, though, does it matter that much for someone if someone's an equity investor if we see the yen at 150 versus 160 or thereabouts?
Yeah, it does matter. It matters for the sector leadership inside the market. The stuff that's gone up in Japan through all of the initial excitement of the Japan rally has been mostly exporters, banks to a certain extent, because everyone's assuming there'll be pressure on the Bank of Japan to raise rates to protect the yen, that kind of stuff. If the yen actually stabilizes or even goes up, then that whole sector leadership changes away from those exporters, the commodities and the banks towards other stuff. Domestic names, SMID names, technology heroes, and Japan's got a lot of those, and I think those will be the ones that will benefit if we see a stabilization in the currency. Actually, it does matter. It matters for sector allocation.
And in that respect, how do we get there, though? Because you're saying that we are going to see the yen strengthening considerably, so it's going to be a rapid reversal. What are the conditions that you see happening in order for it to get there, though?
I think there are three major reasons the yen will probably go back to its multi-decade average. One is what you referred to just now in your commentary, the narrowing of the yield gap or the sovereign interest rate differential. We're already seeing that. I think it doesn't even need to be argued strongly that narrowing probably continues somewhat. That and the yen-dollar rate has had a very close correlation over time, so that's one thing that will stabilize the yen. Second thing, again, you mentioned it just now, the unspoken, the unmentioned, but quite likely intervention by the Japanese authorities, which is very logical, given that actually many Japanese companies suffer with the weak yen. They procure, of course, commodities, they procure semiconductors, they procure even labor through overseas production in non-yen currencies, and the weak yen hurts. And of course, there's pressure on the Japanese authorities to intervene. The third thing, real simple, is I think there's often a consensus among people who watch Japan for the first time, who come to the story after a while, that Japan has big problems with the sovereign debt. Yes, but actually the net debt position is not as bad as it looks, and the debt is not a new story. Japan's been dealing with that carefully over time. And what I'm saying is the debt is not a reason to have a weak currency. And so as people realize that, and then those other factors change, narrowing of the yield gap, intervention, pressure, I think the yen could really surprise. You yourself commented, I think, on the very quick move we saw after even the slightest hint of balance sheet relaxation by the US, by the Fed last week. I think the yen saw a 3 or 4 yen move just on that. It went back a little bit, but that was quite important. It suggests to me there's something of a coiled spring of pressure upwards on the yen. And again, I say it matters for sector allocation in Japan. It's going to change the leadership of the market, I think.